today I'm here with kind of a rock star panel to talk about something that we don't talk about enough in the industry, and it's specifically the intersection of kind of the market itself, like the actual financial markets, and media buying and promo in our space. And considering we are a financial publishing universe and everything we talk about in our products has to do with the markets, and the market cycle affects how our businesses not just perform, but how our marketing performs, because we're always talking about the markets in our promos. It's kind of funny to me that we actually, and you know, I'm guilty of this, haven't spent enough time talking about this fact that the actual things happening in the market are kind of driving what's going to convert and not convert. And so today, for our Rockstar panel, we've got Wes Anderson, who's one of these top media buyers. We've had him over and over again at the summit. He's over at Angel Publishing. He's a stellar in-house media buyer. He's doing some other stuff now. And then we have Flagle, who everybody knows, Charles Flagle, I think at this point, who was the head of media buying over at Money Map for a long time, and he's founded Traffic Grid, and he's been out there crushing it for a lot of people in the last several years. And then we have Matt Warder, and Matt Warder has spoken at FMS in the past. He actually is like a real analyst, in the sense that he was a coal analyst over at Wood Mackenzie, which is, you know, kind of one of the premier resource analyst groups out there. And then over at Money Map Press, he built the whole data team and built this data infrastructure that was kind of a unique thing. And so he's also been an editor, faced products, wrote stuff for, I think, Rick Rule's products, and then some of his own products at different places. And so he's got a ton of experience in publishing. And the thing that's interesting about Matt's work right now is he's been really diving into this intersection of kind of like the macro environment, the connecting it with kind of search trends and what people are actually looking for in the markets, and then how it intersects with media. And so what I wanted to do today is kind of start with a conversation about this and show you guys how this actually plays through. And then I have Charles and Wes on here to do a couple things. One is make sure that we're not talking out of our butts, because they're actually the guys who are on the ground spending money, buying traffic and media, kind of see where they see this conversation, kind of lead where this conversation can go, which is how does this actually, you know, how does the rubber hit the road in your publishing business? But before we get into that, so welcome, guys. Sorry, good to have you here.
Yeah, thank you.
On whatever, I don't have a name for this. Is it a show? Is it a podcast? Is it John just rambling? We don't know.
Newton's Nuggets.
There we go.
There you
go. So thanks for coming on. But like, I think we should just address the fact that like the industry is kind of, I feel like people are freaked out because there have been layoffs. Conversion does seem to be harder. I think I have a thesis, and I think you guys share it, but I'd love to get your take on it, that basically the reason conversion is harder is that there's a message to market mismatch going on.
Yeah.
So what do you guys think?
Yeah, I mean, I agree. Like, you know, obviously at FMS, the mood was kind of somber. Everybody was, you know, questioning their life choices and all that. But it's like a perpetuating reaction. Like the truth is in ad networks, there is some fear stuff that's working. Like, you know, Legacy had a No Me Prince promo that was pretty good. Agora Financial has a really good Rickards promo, but it's also not the end of tech or the end of greed as we know it. You know, it's I don't have any crypto promos working, but you know, I mean, Banyan has some pretty great tech promos that are as strong as ever, maybe even stronger than last summer. But at the same time, we're hearing from publishers like, oh, backends aren't converting. I don't, you know, it's hard to tell. There are so many variables at play, but it's a weird time for sure, you know, and I think like a lot of the promos that we've been running sort of address the market as, you know, we're on like a, what is it, like a 15-year bull market tear, you know what I mean? And aren't really addressing the fact that over the last 6 months, things have been tanking. And I think, it can work without addressing that, but it's kind of like, not addressing the elephant in the room. And so a lot of even the greed promos that I've seen that have been working do address that. So that's what I'm seeing.
Yeah. What about you, Wes?
Yeah, I mean, to be honest, it's almost been relieving ever since like FMS and talking with other people to know that like this is a more macro thing, and it's not I don't all of a sudden suck at media buying and like everything sucks. So it's been reassuring to that extent. And then a challenge I face as being in-house is more just being able to pivot from pretty much customer acquisition first strategy to a lead generation first strategy. So and I have tons of experience doing lead gen, but it's just been a while. So getting reacclimated to Google display and Google search and being in tune with more macro trends and search volume, and then being able to marry that with the internal promos we have working. But I think it's been the right move because kind of like Charles was saying, back ends are way tougher to sell. So I think to be able in a position to invest in lead gen and building up free lists, so when the time comes where the appetite is back and the markets are showing improvement, then we'll be in a pretty good position to capitalize on that with all these fresh leads that haven't been fully monetized yet. Yeah.
And I go back to, in my head, I always go back to like, I'm one of the old men who was around in 2008. And I remember like, you had this adjustment period, and it wasn't like you had this adjustment period where all your promos no longer worked because the environment changed so fundamentally so fast that everything that you had in the works didn't really convert. And then there was a lead time as people figured out what the new messaging was, and the promos had to be produced. And then in parallel, because back then the trader education world, affiliate marketing kind of trader world, didn't really intersect with the publishing world. That didn't happen until we put FMS together, really. There was all these like really active trading stories. I mean, people were converting like crazy, and it was kind of boom times in that side of the business. And so I feel like it's really like this is a good segue, I think, into Matt, is that the market buys when it's made a decision, when we know which direction the market's going. They might change what they're buying, right? Whether it's a greed period, if it's a risk on or risk off period. It's that period of time when I don't know what's happening that really kind of screws everything up. And so Matt, like, let's jump into what you're here to kind of lead us through today. What's your take on this? Where do you see like kind of a macro approach to markets intersect with the publishing world?
Well, I mean, I think the first thing that we all have to understand is that, search is a reflection of reality, right? And the reality is the market peaked in November, and, NASDAQ is down 25% since then. Bitcoin's down 58, 59%. And, if those things aren't working, people aren't going to be interested in going to look for products to pair with that. So, we have to understand, at least if they're not looking for those kinds of things, what are they looking for? And I think there are clear trends, in search that are telling us that, people have stopped, asking, how do I trade this? And they've started asking, how do I get through it? I guess is probably a better way to put it.
Right. So we've gone to risk off mode, basically, if you use that very binary kind of a way of looking at the markets.
Yeah.
And then in a risk off mode, like how are you thinking about search? I mean, search volume is one thing. In what terms of searching it for is one thing, but like, how are you looking at this kind of more holistically in terms of?
I mean, can I share screen? I don't know if I can.
Yeah, 1 second. Let me switch you over.
I'll try again. So this is probably the easiest way to kind of address it. Can you guys see this?
Yeah.
All right, so let me go ahead and just pop it up. Yeah, I mean, we're in a situation where investor interest has shifted, right? We stopped asking how to trade. Pardon me, had a cold here for like 3 weeks. But like typical long-term keywords that we'd go get, stock market, day trading, stocks to buy, options. I mean, you can see they're off. They're off relative to history. We had this great peak during the pandemic, and then kind of a resurgence during like the short squeeze last year, where people still have disposable income. But since then, it's fallen off, and we're in kind of no man's land, right? And the same thing's true with crypto, like Bitcoin, Ethereum, NFTs. Like they all show the same patterns. And the answer is pretty easy. I mean, it's because everything's down. So if it's not going to work in the real market, it's probably not going to work for your product either. So, and the things that people are searching for, though, are recession. I mean, the highest search volume of all time, for the word recession. The highest search volume of all time for the word inflation, right? Housing prices, car prices, food prices, power prices, all trending on a real basis in 3 months, right? And then what that's kind of created is this cycle where, you know, the terms that people want to search for, I think they still do want to search for tech and, you know, call options and, you know, day trading and easy money stuff. But reality is really set in and disposable income just isn't there. So we've had this like kind of cycle through terms where this is the word inflation back here, which peaked back in May. And that was followed by gold, which is this yellow bar here, which was followed immediately by recession, and then by the US dollar, which has just absolutely been ripping here for the past month. I think the dollar is up 10% in this year. It's a huge move for a currency. And that has negative iterative impacts on the rest of the world's economy. And I know Bloomberg has been running articles that are very dollar centric that are talking about it because, you know, search interest is driven by the things that are moving. So, you know, Bloomberg, CNBC, and our industry should all be writing stuff in thematic packages, you know, getting ready to launch products that are trending, you know, in terms of search right now.
So
you know,
can I stop you there for a second?
Sure.
Too, just to keep, so just to kind of, and I'd love to get, you know, Charles and Wes, your take on this too, but just to kind of go back to that point that the search volume, like you said, follows the market. Our promo is not a leading indicator, right? I mean, it's kind of a, you know, we all know this, like we talk about this, like it's one of the frustrations that you often have with an editor is like, well, why are we talking about the thing that just happened, not the thing that's going to happen, because it's easier to sell kind of the thing that happened in the past. So a lot of our promo tends to be a trailing, not indicator, but it's a trailing, it trails the market. It doesn't lead the market so much.
right.
Right. I mean, am I wrong, Charles, Wes?
Yeah, no, you're totally right. And this is something I know we talked about before, but like as a lead gen specialist at Money Map, like I use this data all the time. And you know, it was one of those things. Mike Ward and Brett Holmes empowered me to sort of come up with my own ideas and stuff like that. This is like incredibly useful. Now, as somebody who does lead gen, it's a lot easier to crank out some ads and a landing page and a report than it is a promo. However, you know, we see these lags now. Like you had inflation up in May, and you know, Agora Financial's Rickard's promo that's doing really well right now. I mean, that's addressing inflation. It's also about the US dollar. And so I think, yeah, I don't know what the process for writing that promo looked like. I do know that Agora Financial is pretty quick with how they can crank out front end. But I think it's a case of how maybe not pivoting because they've always had Jim Rickards, but I guess if you have the ability to pivot, you know, for instance, if you've been running like, here's a $2 stock that's going to get you 10,000% gains because of a new energy tech, having the sort of like a fear type thing or something that addresses inflation in your back pocket is a winning technique, I guess, in times like this.
Yeah, it's sort of like, you know, you got to bring the right tool to the job, right? And the right tool for this, for the job of addressing this market is Jim Rickards, is anti-fiat, gold, inflation centric, like, the government's messing up, they don't have your best interest at heart. Like those kinds of things are really what people are feeling. Like, the searches for inflation and recession, I mean, it could well just be an anger index as well. So like, that Nomi Prinz promotion that's about, that one weird thing that happened in 1971. Well, it's the gold standard, right? And so, unusual market activity, those kinds of things are all thematically related to instability in markets. And, addressing them directly, and having a solution and plan for that is sort of, I think, what, search interest is telling us that people are kind of asking for right now. Like, how do I survive this market? How can I make money, in this market? And I think that sort of pivots us over to like, dividend and income and those types of things, because that's usually what works well thematically, right?
Yeah, I'll just add to that. I think something marketers need to keep in mind is not falling into like analysis paralysis or like a data trap where you see all this search volume and then it's easy to think, oh, we got to push this type of content because that's what search volume is telling us, which may be true, but you also have to marry what is also working internally, what promos work, and being able to marry the two. So it is possible, but it takes a little more like big picture, a big picture like perspective, and also just the ability to tweak landing page copy. Or what I've been doing in bonus reports is just adding like introductions or conclusions that, touch on present times, even if it's, not totally related to what the user signed up for, but, once you have that interest, trying to just move them along to something that is working, and just, being more hands-on at many steps in the funnel and not so much just on trying to capitalize on the very top of funnel search interest.
Gotcha. So like in the report, you want to put the thing that's most relevant to them, what they're thinking, like above the fold, and get them in, and then begin to transition that into whatever report it is you're writing. But you have to make it relevant to them right now, right?
Yep. Like a PS or, like an and then type thing.
And I would say like another thing that, like, because there is like this, it's your ability to execute. Like this is starting. We're starting to get into essentially an analytical tool and just in a way to start to frame and think about promo and product even, that should be part of the conversation. And I think in one of our kind of prep calls, Charles, you brought this up about the way Stansberry Research kind of would always say, I think, how did you phrase it? It was something about the guru basically generates the idea.
Yeah, that's what I heard. They made a pivot to that, I don't know, 5 years ago or something like that.
Which if the guru is generating the idea, then it's kind of like you're basically saying that your guru theoretically, and in some cases and not in all cases, has a really good handle on the market that he covers and understands what's happening. And so his thematic should essentially start to map with what the market's going to be doing. And so your hope then is that the guru's idea that marries with the copywriter is going to do that. But how do you know? And also, like, there's a lot of art when it's done that way versus a little bit of science. And so this to me is a rational tool or a rational way of approaching this to be able to structure a conversation internally about what should we be talking about, what should we be marketing, what are the stories that are kind of most likely for us to test, right? Rather than hey, this is a one-to-one, like, oh, they're searching for the dollar. If I do a dollar promo, it's going to work. It's like, no, like you have to put that into the workflow and kind of idea machine that is a publishing business.
Yeah, I just wanted to, sorry, go ahead.
No, go ahead.
Yeah, I just wanted to, there's another layer. So like what we're getting from this search interest is topical. And so you really need an idea. Or at least I still sort of subscribe to that sort of classic Agora thinking, like, it doesn't matter if tech stocks is trending right now, and you write like, oh, I got the #1 tech stock of all time. Maybe that wouldn't work as well as saying like the end of tech stocks. You know what I mean? And they're very opposite ideas or very different ideas. and it doesn't matter. You can turn that into a tech stock pick. I don't know, but it's like we're given this topic, and then there's something to do on top of that. And so with search and at Money Map, we try stuff like this like all the time. Like dividend search is always very high quality traffic and pretty high volume. Surprisingly, people are willing to give you an email address for it. And these searches are like, what dividend stock should I buy now? Let's create a $5 package that's maybe 2,000 words and addresses just what dividend stocks people should buy now. Now, as far as you're going to get with that is dividend search keywords. You know what I mean? I can't push that out there and be like, dividend stocks. I could, it's going to be expensive though. You need something to say like, I don't know, beat the market by, you need an idea. I'm struggling right now, but you need something on top of that. And so it's the same thing that we're seeing with the dollar. Like, there are just a number of ways to spin that. And the way that Agora Financial is doing it with their Rickards promo is that there's going the end of the dollar is approaching, and we're about to be all using a like Fed cryptocurrency, and the fascist Dems are going to take away your money if you voted for Trump. And like that is sort of the idea. The dollar is the topic, or the economy is the topic.
Right.
Yeah.
Right. And then and I want to dig in because Matt, you're going way deeper than just like kind of search interest here. Yeah. But before we go, because I know there's going to be some cult of the copy people who are saying like, a great idea sells when a great idea sells. And I think that's true. And and I'll give you an example of a great idea. It was a promo back, I can't remember the exact year. It wasn't 08, but it was in that kind of like soft period. When Nicholas Brack and Aaron DeHogue, when they were at Newsmax, wrote the Biblical Money Code or the Biblical Money Code promo, which had nothing to do with the market, but it was pure. I mean, in a sense, this was pure art, or you could say identity marketing, and it was speaking to an identity of the market, right? So the copy idea was really not about, it was about the idea of building wealth using biblical principles. And that spoke to the audience at Newsmax in a way that was really kind of relevant because it was completely disassociated from anything happening in the markets. And so our point here is not that you can't write a promo that's not about like kind of current market, but those kind of promos are fewer and farther between. They are the more artistic, I would say, aspects of copy than the less science, and that most of your promos still are going to be, you're talking about trends, you're talking about like small caps, you're talking about large caps, you're talking about maybe macro stories or alternative assets, and pretty much the lion's share of your promos are going to fall into this kind of a framework that is kind of market driven. And so I guess with that, I'm gonna throw it back to you, Matt. Like,
well, it's interesting you bring up, the Biblical Money Code or whatever it was. I don't know if you guys have ever read this book. I'll see if I can pop it up there. But Narrative Economics by Bob Schiller. I mean, you can see how many like notes I have in it. Like
based on your recommendation, actually.
Yeah. But like, he's got 7 principles. He talks about how narratives can, thrive and go viral. But the 7th one is narratives thrive on attachment. Okay. That means human interest, identity, or patriotism. And so if you think about that audience, that Newsmax audience, it's like, well, they're conservative, Republican, most likely religious. So if you're taking them through a thought process that they identify with, they're going to be more apt to believe you and more apt to go along with your premises, in that sense, as they're working through copy than if you were to present them with something that is, runs counter to their cognitive biases, right? I mean, this is like Thinking Fast and Slow 101, another good book by Daniel Kahneman.
Narrative economics is definitely something. If you're a copywriter writing in this space and you haven't read narrative economics, like you're missing out. Like,
And the cool thing about it, or at least what I always thought was cool about it, was it literally talks about the intersection between finance and narrative. And it's important to me, like I know I subscribe to a lot of, financial macroeconomic services that kind of chide on, narrative and story stocks and those sorts of things. But like, as was kind of mentioned at one of the conferences we went to for you, the guys who are doing taking companies public on NASDAQ, they said you can go public with a, with or without profit. You can go public, with or without, even a business plan, but you can't go public without a story. Like the narrative of this world, that's how people remember things. So like the narrative is the most important thing, but ideally, if you can find the intersection between, a really good story and the real world in a way that connects with people, I mean, that's really where the rubber meets the road, right?
And that was from a guy who raised, I think, $9 billion in the last 2 years with a B for companies. And he was
kind of important.
Yeah, he's got a little bit of experience there. And so the fact that was a beautiful thing, like that's a crazy idea, that the most fundamental thing you need to go public on a major exchange is a good story.
And it's there are lots of ways to tell that. Like, we're talking about the dollar, and how the dollar could pivot into, literally anything if you understand what the connections are, right? So if you have a crypto promo, like we're in this weird period where, like for instance, I'll just share it again. The narrative has kind of cycled away from the dollar, like the dollar search interest is going down. And this little thing back here is tech stocks. It's popping up with a positive Z-score, right? Call options right over here, popping up with a positive Z-score. So there's a period of time right here as the dollar declines. The correlation between the dollar and markets right now is dollar down, market up. So you can run, a tech promo or a crypto promo right now, but the dollar might be a better in, right? And you can do that in kind of an anti-fiat way, in the same way that Rickards is doing, except instead of pivoting to gold, you can pivot to crypto. But you have to talk about the thing that people are most interested in. So and then I got a couple of slides on how market direction and events really drive search. And because of that, we kind of need to know what drives the market, right? The book that I kind of used to learn this was Ray Dalio's Principles. And he talks about how the economy is basically driven by three things. There's productivity growth, the long-term debt cycle, right? As debt increases, then people can go and spend that money, right? Debt is basically future dollars paid, right? And then the short-term debt cycle. And if you lay them over top of one another, looks something like that. And so the big cycle is like 85 to 100 years. And then the short-term debt cycle is like 5 to 8. For us, what's relevant is we got to zoom in further, right? We got to take the short-term debt cycle, drill into one of these little, peak to trough cycles. And that's like 3 to 12 months. That's where we live in this industry, right? All of our business cycles are 3 to 12 months. It takes about somewhere between 3 to 12 months to get a promo done. It takes markets that long to cycle through one sort of mini cycle within the business cycle. So like this is our kind of natural rhythm, right? And what drives the cycle is spending, right? Consumer spending, government spending. I mean, how many subscriptions do you think we sold because the government issued stimulus during the pandemic, right? Investment. Go ahead. Sorry.
Well, I was going to say if you look at the parallels, and there's more things happening structurally in the market back in 2008, but the parallels of a generational shift in how you consume investment information and government spending that QE started, like basically drove those two things parallel the largest expansion our industry's ever seen.
Yeah, and it's policy has the ability to change fundamentally the direction of the market, whether that's monetary policy or fiscal policy. The difficulty with that is we can't always predict it. Like we might think we know what the Fed's going to do, or we might think we know what government's going to do, but at the end of the day, they're fallible human beings who make the same dumb decisions that we all make. Just they get a chance to do it at scale. But when you sum all that up, like you essentially get to the equation for gross domestic product. So you can use GDP as a proxy for spending, because that's essentially what it is. And then as that spending moves up and down, it moves prices up and down for food, housing, transport, clothing, commodities, healthcare, recreation, goods and services. And if you average all those in together, you get CPI, you get inflation, right? So just two things, growth and inflation. So if we chart that with GDP going up and down, and inflation increasing to the right, we can basically divide economic conditions into four categories, right? Reflation, where GDP is going up, but inflation is still slow. Inflation, where they're both going up together. Stagflation, where GDP slows, spending slows, but inflation remains constant, which is kind of where we are about right now. And then deflation, which is when the shit hits the fan, markets crash, all those sorts of things, right? Mm-hmm. So asset classes and factors do better under those conditions, right? So if we divided the universe into sectors and factors, like during reflation, tech, consumer, commodities, industrials do better, and then mid caps, high beta momentum fare better. If we move over into inflation, we add in financials. Financials tend to do better there. Energy and commodities do better. And then high beta and small caps outperform, right? So when we move to a situation where GDP is lower, then we need to be more defensive. Utilities, energy still works, fixed income, large caps, quality. And then when markets really go down, you need to be even more defensive. That's where gold comes in. That's where fixed income bonds come in. Healthcare tends to do better. Real estate, any kind of bond proxy, grandpa stocks, dividend yield, defensives and value. Almost always, it's not 100% of the time, but call it 80% of the time, these are the asset classes that fare better. And so if we think about it in terms of promo, when things are good and GDP is rising, we can run tech and growth and the next big thing, right? We can run trading systems and option strategies, penny stocks and commodities and resources when they're booming, right? And then when things aren't going well, when GDP is falling, that's when we need to get crash promos ready. Inflation, gold, commodities and resources oddly do well in both categories. You just have to understand how to connect them to the topics. Dividends, value, short selling, large caps. I mean, those are our themes, right? And then, so where are we? Well, look where we are. We're right here. This is Q2 right now. This is almost close to the origin. This is like no man's land. Nothing trends in this area, right? We've had some energy inflation, but that's kind of pulled back.
Could you mouse over or if you can see my mouse, it's this little area here.
Which I can't see your mouse. Where are you at?
Right close to the intersection of the two axes. That
right here.
Gap. I can't see yours on this. That's
we can't see either of your cursors.
Oh my god,
okay,
that's
fair
frustrating.
Okay,
that's all right. We get it.
Yeah. So where it says 22 Q4, 2022 Q4. That's where we're headed. If you move back 2 dots, so the third dot from the left, which is pretty close to the 0 mark, that's Q2. I thought you guys could see my cursor, sorry. But so we're moving out toward the left, right? We're going down and to the left. What that means is that things are going to get worse before they get better. So nothing's trending right now, but macro data showing us that.
Could you pull that back up?
Yeah, I will. Things are bad, but they're starting to get worse, and the wheels probably going to fall off in Q1, Q2. So you think it's bad now? It could get worse without policy intervention. I'll pull it back up there.
Well, because I think like this is from a publishing and copy perspective. But like from a product perspective, like can you go back 1 slide?
Yep. Escape.
Yeah, that, and then like what you have in these different quadrants is kind of like all the different franchises that we see in the industry. And one of the problems, I think one of the problems that we saw with the longest bull market in a long time is that a lot of the commodities resources letters were abandoned. A lot of the energy letters were abandoned. Right, because it was so much easier to sell crypto. It was so much easier to sell like trading systems. Like we had a whole period of time where it seemed like every black box trading system promo that went out did at least okay.
Yeah.
Then there was such a variety of other things that were working better, that like the commodity and energy franchises and resource franchises kind of evaporated. And then at the time when that's the thing that starts to sell again, like nobody has that asset, or very few people have that asset. And so from a like, if you think about your publishing strategy, kind of from a corporate strategy standpoint, you have different products, you have different business units. I think you guys, Wes, did a great job with Energy and Capital. You kept that franchise going and going pretty well, right?
Yeah, I mean, that's the top 3-letter right now, and that's what's getting the most names on lead gen. Yeah, it just seems like energy is still always in play, no matter what's going on, and that's sort of been the bread and butter of our front end promotions that have been working in recent history.
And so if you're coming from an investment standpoint, investment newsletter standpoint, you can almost take a portfolio approach to your gurus and product mix, because at different market cycles, different products and gurus are going to do better than others. And I know you can also have one single big tent guru, but you got to have a really great guru to be able to move across sectors like that. And that's harder to come by. And so like, I think that idea of using that quadrant approach or portfolio theory really for thinking about your product mix is kind of one of those basic frameworks of publishing, financial publishing, that should be in your head. And then the other thing I was going to say is if you're a copywriter and this stuff is boring you, then like smack yourself in the face several times, because like the density of ideas that you have is dependent on how much you understand financial markets. And that's what, like when Porter Stansberry was on, and I interviewed him, that was one of his biggest complaints. And he has a lot of negative things to say about copywriters simply because he feels like they don't understand the financial markets well enough to write good copy. And it's one of the problems I think that I've talked to pretty much every major publisher in the last couple of years, and I brought this subject up. I've talked to, Mark Ford, I've talked to Porter, I've talked to Aaron DeHogue, I've talked to everybody. And everybody agrees that one of the problems of this last bull market and so many like kind of crypto booms and the cannabis boom is that you got all these copywriters who only know how to sell huge gains because the market's going up, and they're the ones who are struggling the most in their personal careers right now, and they're also not performing for the publishing businesses. And so like I can't stress enough like the importance of actually understanding financial or capital markets in investing if you're going to be a publisher or a copywriter, because this is the stuff that you're selling. And if your customer knows more than you do about it, then it's really hard for you to come up with things that like sell to them, but also like for you to come up with ideas that are engaging to them. So rant over.
I just want to kind of add to that if I can. I don't know if this is the right word. I just thought of it though, but like investing sort of became like memeified with weed and crypto and EVs. Like I don't really watch CNBC too much anymore, but I keep it on in the background. And it's like they'll talk about, or maybe a year ago, they would talk about EVs all day. And so like, of course, that's what people want to get into. And 5G was a very similar thing. And yeah, like the promos. So, probably since like 2016, the stuff that's worked really well have all had to do with these sort of memes. And you're right, like the structure of the promos, and I think this is probably why we got into so much trouble with claims. If you look at like a lot of these fear promos, like, man, they don't rely that heavily on claims, if at all. You know what I mean? It's only because we've been playing into this like extreme greed that's sort of been perpetuated by sort of like a lottery player mentality that mainstream investing news is kind of pushing. And like, that's easy to write to. When crypto came out, Money Map, we had our top copywriter working on a promo. We knew it was going to take a while, and we just really wanted to take advantage of what was going on. So a couple of guys on my team and myself wrote a promo that worked and did, something like 100,000 units. And it wasn't hard. It was simply talking about the opportunity. And if you remember the James Altucher promo that Agora Financial had back then, I mean, dude, they had the product shot at the top of the promo. Like, how much more straightforward a sale can you get? Versus, I think when you're not talking about memes, then a narrative is necessary that is more than just look at this stock, look at this stock's gains, look at this technology everything depends upon it. It's a lot different.
That's
and you can look at promos, and like, a lot of copywriters came up in this environment, and like, man, if they don't change it up a little and start reading what our sort of elders have been putting out for years, they're in big trouble. And as an advertiser, sorry, just real quick, it's a lot more fun to do this sort of narrative type stuff. Like, past, 3 years, all I've been pushing is like, top crypto to buy, top 5 stocks to buy. And no matter how creative I get with it, I always wind up through split testing back at some really generic sort of thing. And just now we're sort of able to put these like kind of cooler narratives out, and they're working again. So,
well, to speak to that trend issue, that's the classic like stages of awareness from Gene Schwartz's Breakthrough Advertising in copy. And he talks about like, there's one state, like the most aware is, I know what the product category is. I know that I want it, and I'm just looking for somewhere to buy it. And I feel like when you have those peaks, like in an investing trend, there's a big segment of the market that's like, I know I want to invest in crypto, right? I'm looking for something to invest in crypto. You're telling me that you have something new to invest in crypto. I'm in, right? Because they're the most aware, right? And outside of those like kind of moments, you have to actually work to sell them. Like, it's not that easy. That's basically just announcements. Like you said, you put the product at the top, right? And if you time it right, like I think they threw so much money. They threw $60 million, I think, in like 45 days behind that promo, because that was so perfectly timed to the boom and the parabolic move, and then of course everyone who bought in right then crashed and lost all their money, I think, probably. Because it was so perfectly timed with what we're saying. Like, the market was moving in parabolic, they were spending like that, people were buying like crazy. It's a huge success, but then the market crashed right behind it. Then they had that spend also led to Google and Facebook and the crypto bans, and knocking all of Agora companies off of Google and Facebook for 2 years. So it's kind of like, but anyway, to go back to you, Matt, like, where else would you take this then?
I guess in what way? Like, where are we going forward? Like, what does the landscape look like, coming up? Or
yeah.
I mean, look, the inflation has been driving everything, right? And let's think about what inflation is, right? It's just prices moving up. Well, the prices for everything have literally gone crazy. I'm going to pull up a chart on commodity inflation, because that's really what it is. It's the price of stuff, and stuff is really just commodities. And that sort of cycles back to natural resources, right? Metals and mining, oil and gas, agriculture, all of those are kind of needed for basic human existence. And, we're kind of privileged in the US in that we have a lot of it here, but, countries like Sri Lanka really don't. And, as the dollar rises, it gets very difficult for emerging markets to sort of function. So, but like, just so people have a sense of how big resources have gotten, can you guys see the chart, or are you looking at? Okay. So, can you see the orange line there? Okay, and I'm going to highlight the green one. I'm going to highlight pink here, and then let's get heating oil and crude oil. Right, so these three up here, this is thermal coal since inflation began in November 2020, right? This is, I believe this is Newcastle, or sorry, this is European thermal coal. This is Newcastle thermal coal. This is South African thermal coal. Down here we have diesel. Right below that we have gasoline. Right below that we have crude oil. This is all energy. That's what energy has done since 2020. And we can compare that to this yellow line, which is Bitcoin. So energy is outperforming Bitcoin at its peak, specifically coal, on a 2-year basis. I mean, this is what people are worried about. This is what people are concerned about. And like the dynamics that are going on behind it, I don't think it's really going to stop. Like we might stop going up, but we're going to stick here at these higher prices because we have a shortage. So this is bituminous coal stocks in the United States. This was last year at around 46 million tons of stockpiles at utilities. It's down 26% year on year, 26%. Out west, it's a little bit better, but still down relative to history. Relative to last year, we're down 20%. So if you think about the power grid, we have intermittent renewables, right? Solar only goes during the day, wind only goes during at night, and all of those are backed up by baseload generation, which is the trifecta of nuclear, natural gas, and coal. So what happened during the freeze out in Texas, if you remember about a year ago, is that natural gas got diverted to heat homes, and that left coal to serve as baseload energy, but we were too low on stockpiles. So we had brownouts and blackouts. People were without power. Well, look where we are in terms of gas production now. This was last year. This is gas and storage. It's already down 10%. And the largest drawdown in history, which I think was 2019, was 237%. Let's look at it on a dollar basis. It was 2.6 trillion cubic feet. So if we don't inject enough production into storage to get to probably around up in here, around 3.2 trillion cubic feet, we're going to have those same brownouts and blackouts all over the damn United States. And keep in mind that Europe has a worse problem because they don't have any Russian gas, and Russian coal exports provided 50% or thereabouts of their total imports. So I know that we talked about how people are talking about how oil has sort of come down from that $120 level down to like 100, but without Russia in the market, there's nowhere for energy markets to go. So we either stick at this level, or God forbid, we have really cold temperatures in the winter or really hot temperatures in the summer, it's just going to drive natural gas prices up, and that pulls coal prices up in concert with it, right? So the whole energy complex is going to stay right here. This is going to be with us for 2 to 3 years, as long as the Russian conflict goes on. So like what I've been telling folks is that the types of reports I think will probably do well, oil, gas, coal, nuclear power, energy security, I think will work. Anything around Russia and Ukraine, trade flows, the supply chain. We have a food crisis. I mean, the world's short of wheat. Russia's trying to control Ukraine wheat exports. Fascinations on the supply chain, but for reports, we always have to have kind of a large cap lead that you can give away. But we have to pull them back into what I think are going to be kind of smaller exploration driven plays, because the world has to wean its way off of Russian material and into more Western friendly countries. So I think a big theme that's going to emerge is exploration for metals that are critical to the electric vehicle transition, right? Nickel, cobalt, lithium, those types of things. I think those will come back into favor, when we do get an inflection of the cycle. Energy, oil, gas, coal, people are going to pay attention to all of those things. But I think we do have an opportunity to kind of pivot them into what is, I think going to be the most important, global issue over the next 10 years. And that's exploration for those materials, because we just haven't done it in years. We have this 10-year just miserable cycle for commodities. Oil busted in 2016, and that's part of the reason, that people wound up cutting their resource groups. But that part of the cycle's over, and we're in a new paradigm that has greater implications other than just, selling newsletters. It's like I really think it's how we're going to be able to connect to, to people who are interested in investing for the next 2 to 5 years, at least, probably for a decade. So I think it's kind of time to get back to good old fashioned blocking and tackling, right? It's like understanding what constitutes good financial analysis, understanding special situations that are out in the market, because you can always write a report on those. Like those will work in any environment. But it's
let's explain from to the marketers and copywriters and stuff. When you say special situations in the market, could you describe what that is and give some examples?
Sure. Instances where people have to come into them, they're forced to buy a security or an equity, or forced to sell a security, equity, or commodity, right? So if you think about, if I could just use the energy crisis, when temperatures go way down in the wintertime and Russia needs to buy fuel to power their, when Europe needs to buy fuel to power their grid, there's not a whole lot of natural gas in the market. So when they're forced to go into the market to buy it, that drives price up, right? Or alternately, when people are forced to sell, we just had, kind of a big market down move in the latter part of June. Why is that? Well, it's month end and quarter end and options expiry kind of all at once, right? So anybody who didn't do well professionally was getting the tap on the shoulder, and there's PM is selling everything that they've got in the fund, right? And if they did do well, energy is kind of paused here, so they're going to take profits and they're going to go to the beach for 3 months like they should, right? Mm-hmm. So, those are the types of things where people are, selling en masse or forced to buy en masse that can really drive the market. Twitter is a good example of a special situation right now. So Elon's in court. If he loses in court, that merger is going to be forced to go through, and Twitter isn't worth $30 some, it's worth 40 some. So it's a good speculation to make, because your downside is pretty calculable, and the upside is pretty big. So those kinds of situations are great to write about. You can always get traction on them, and people are going to be interested because they're topical.
Right. And that seems to be thinking of different promotional models. I would say in the trading space, in the smaller kind of trading publisher space, where you have basically the weekly webinars, you can be much more on top of what the markets are doing and creating promo around that, I would think. Because a lot of times the webinar promo is, the back end of it is pretty much different. You just come up with a new thing on the front. And so if you're really able to kind of when you're buying leads in particular, and then also monetizing your in-house list with those webinars, I think being able to talk about this stuff and come up with this is how we're going to be trading these things over this period of time seems like a good kind of constant ongoing content marketing strategy, because the promo itself becomes valuable because you're kind of laying out kind of the nature of what's coming.
And if you don't have an expert on some of those subjects, well, find one. Call
you consult too.
Exactly. Call me or call John. We'll find you somebody. Mm-hmm. I think part of the fun of the newsletter industry is being able to learn in real time, right? I've never managed money professionally, so when I see people doing interviews that talk about kind of how the sausage is made behind the scenes, how quarter ends work, I love that. I consume that on the reg, right? Mm-hmm. That's kind of what I really like. But your guru doesn't necessarily have to be an expert. He can ask an expert, right? Mm-hmm. He knows what kinds of questions to ask to pull out information that's going to be useful to people. So you can launch a product that is focused on your guru that maybe lies a bit outside their expertise, where they're bringing in sort of outside ideas and outside help. There's nothing wrong with that. This is a big world, and we all like to learn together. And I think the better and more cohesive an investing community you can build, I think your subscribers are going to benefit tenfold.
Yeah, and I'd like to add sort of another piece to that, which is, you can take this kind of stuff and run tests with it on lead gen before committing to a promo. So like, if you have, an internal media buyer, or if you want to drop some money on lead gen, you could always talk to guys like me or George. And we might be able to test some of that stuff out for you. You can also buy co-reg and test your ads there just to see the consumability of that stuff. And that's sort of the other side of it. Like, there might be some really great investments to be had, but it, we all know we got to sell it somehow. So I think, exactly what Matt is talking about in tandem with some sort of a marketing mechanism to provide feedback of how consumable or impactful an idea is a really powerful combination. And, he and I work together at Money Map, and I think a lot of our biggest promos came out of that kind of workflow. Another thing that I do just want to, this is sort of a side note, but energy and commodities are incredibly versatile. We were just talking about about Angel's sort of resources pubs. The best gold front end I've ever run in my life was his. And it was really a greed play. It was about some miner that's a 50-cent stock or something like that. Also, we have, they have this Tesla killer promo, incredible promo. It's a greed play, but it's also something that's easy to pivot into, a resources sort of anti-dollar, we need this to live sort of thing. And I've always considered it, one of the most fun things to advertise just because of that. You can sort of slice it and dice it in many directions. And there are all these sort of catalysts and special situations like you were just talking about, going into that with, say the Green New Deal and new pieces of legislation. And on top of that, I think today, I saw yesterday, the CEO of Intel was basically saying, we need, 70 billion from Congress, or we're going to start looking elsewhere, i.e. China and Europe for our resources, blah, blah, blah. So like, boom, injection of capital right there, promo idea, or maybe.
But I know, and Matt, I think you have a much longer presentation on kind of all the government policies around ESG and other things that are coming in, and how basically it's going to be a government forced mining boom on a scale that we've never seen, because just the materials needed to build all these new things to meet these new requirements are massive.
Oh yeah. I mean, if we got into resources, we'd be talking for hours here, but just to give you an idea, if you stacked up, like, let's just take electric vehicles, right? If you stacked up, every manufacturer's EVs projections through 2030, and then you extrapolated from that, well, how much nickel do you need? How much copper do you need? How much cobalt do you need? How much iron do you need? How much steel do you need? There are not enough mines financed right now to produce all of them. I think we could produce something like 40% of the EVs that are currently projected to be built by 2030 with currently operating mines. And that's before we get into the grid. Like, we want to build, windmills and battery storage for the grid. So like the idea, and I'm liberal, and I'm an environmentalist, or I consider myself one anyway, even though I've been, a coal analyst for years and years. It's that when you force policy, this is kind of special situations, right? You're forcing, people to purchase all these materials that don't exist. So you're going to wind up jacking the price up. So the climate policy is inflationary, and we're going to do some semblance of it, but like, oil, gas, coal, nuclear themes are going to work, right?
And to be clear, for people who aren't familiar with the sector, like Matt, how long does it take to bring a new once you find it, because you have to explore and find the mine, how long does it take to bring a mine online?
Usually, I mean, between 7 to 10 years. The permitting process usually takes 2 to 3 years. If there's any infrastructure that needs to be built, that's another like 1 year. I recently just went to Africa to visit Recon Africa's operations in Namibia. They're 150 miles from rail. When they hit oil, they're going to initially, I think, truck it 150 miles down to Grootfontein and then rail it down to Walvis Bay. But like to turn, that basin, which is, I think, the largest, underexplored. It's a
crazy story.
Yeah, it's a story for another day, but it's amazing. The largest underexplored basin in the world. I mean, you're talking about like, decades of production, decades of development in order to turn that into, another Permian basin or something like that. So, I mean, the scale of addressing it is in decades, not months. And that's the hard reality that we're going to wind up with from a policy perspective. But if we get a regime change in 2024, well, then now a mining boom's on the table, right?
Right. But that's like it's a franchise idea, right?
Yeah.
Because I remember, I think it was Brian Hunt talked about just his front end ideas one time when we were in a meeting down in Miami. And he was saying that a good front end idea is a trend that basically will last at least 3 to 5 years, so that you can keep that promo. Once you get a winner, it's so hard to get a front end winner, that what you need is a trend that's going to last, so that when you get a winner, you can update it and keep it going, versus like, I had this great promo, but then the situation changed 6 months down the road and it's no longer usable. Because it's so hard to get that front end. But then on building a franchise, like or a guru's product line, like these kind of big picture ideas, like that's the kind of thing you build something around that can last for years, because of how big this in the time frame that you're talking about. And it's one of those things that's like, there's Mike Palmer, who, if anyone doesn't know Mike Palmer at this point, you're probably new to the industry, but he was he's a copy chief over at Stansberry. Market-wise, I don't know where he is exactly in the organization at this point, but one of the best copywriters the industry's seen, and also one of the best copy chiefs the industry's seen. And I remember he did a presentation one time about kind of how he takes a single idea and they just keep each new promo is basically walking down with what's the next thing that hasn't been talked about. So like with gold, it's like you start with, oh, it's time to buy gold. And then it's like, well, what's the next thing in this trend about gold that nobody's talking about yet? And that's what the promo is about. And then the next one is, so it's like he's walking down this big picture trend, and keeping the promo fresh and updated by actually leading the conversation to the next phase of the conversation. And that's this rich vein. Once you find a good trend and a good storyline, it becomes a really rich vein of multiple promos. And I thought that was one of the most phenomenal ways of looking at the market itself in conjunction or in parallel with your promo. So it seems very relevant here.
No, for sure. So I guess before we wrap up or whatever, like, other than, I guess, to throw it over to Wes and Senor Flagle, what other than Rickards and Nomi Prins, like, I guess, what other types of things are working a little bit? And then is there anything that's like definitely not working other than crypto right now? Just to kind of get a sense of this moment, today or this week, that kind of stuff.
Yeah, I think tapping into like defense and geopolitics is viable right now. We have a hypersonic missiles promo that's tested pretty decently internally. I would say that's beyond energy, lithium, some of those core evergreen topics that you can sort of pivot to accommodate the current situation. I would say that's the one thing that hasn't been mentioned that's somewhat working.
Yeah. So Investor Place has an iCar promo out that's pretty good. And I don't really know, I haven't read that yet. I know I meant to read it yesterday. The Banyan, they have this Imperium promo and then this Forever Battery promo that are both really good. They have this new Andrew Keen trading promo. That's okay. And then Stansberry had a nickel promo and a gold promo that they just pulled back, but those were working really well for me. And then I think that's pretty much what's working best right now. But and I have theories on why the Banyan is getting away with doing these tech promos, but they're still working pretty well.
Gotcha. Well, nickel.
Do you want to share your theory, or?
My theory is that things are shaking up. People more than ever want someone to trust that they can follow. And the way, if you read Banyan's promos, they go a lot into the guru and access of the guru. And I think they do a really good job of instilling trust. Like, if you look at some bio sections in promos, sometimes it's like a paragraph or something like that.
Yeah.
But in a lot of Banyan's cases, it's like 60 to 80% of the promo. And so my theory is basically just that they're finding somebody to trust more so than like being sold on this one stock, or maybe in tandem or something like that. I don't know.
Right. They're selling the relationship as hard as they're selling the idea, which is, I think, a critical piece.
Yeah. That's I know from just from writing articles at Wealth Press over the past few years, that whenever we'd have a big down day in the market and you release something that is kind of reassuring, like, hey, yeah, markets are down, but here's why. Here's the thing that was really explanatory. Those got better open rates than anything. Didn't matter what the topic was, just because somebody was there with an answer to the question that they were having, and that's where that relationship and trust, I think, really comes. And it's interesting that you brought that up, because I think that's critical, to build that relationship over time, right?
I think
almost more so than track record, honestly.
Yeah.
I mean, I don't know. I'm talking on my butt, but it's so much better to be like, look, guys, like, this didn't pan out as we expected, but like, it's not the end of the world, and here's our plan. Here's how we're going to do this, as opposed to just sort of ignoring that you've not done something as well as you had hoped. Is, to me, I think, way more important. No one's ever going to have a perfect track record. You just have to sort of know how to handle those things, and the better relationship you have with those people, I think the better understanding they'll have.
I had this great guru just years and years ago who he was phenomenal at this, right? Like, whenever he had a winner, he was really great about kind of like saying, yay, we together, look at how much we made. And when it had a loser, he would highlight all the professional funds and everything else that kind of got it wrong too, and kind of position it as like, nobody got this right and we didn't either. And he was really good about that. And so the relationship with the reader was like, he did have a lot of confidence in him, right?
That sounds smart and easy.
Yes.
Yeah.
Yeah, I was gonna say too, like, if you're in a situation now, like I suspect a lot of publishers are in, where promos aren't working, it's even more important for the editor to just deliver content and just be present and keep checking in more than ever. And then that'll trickle down eventually into retention, renewals, and stuff like that. So when you do have that promo, you've strengthened and deepened that relationship, and it's so easy to do as well. Since pandemic hit, we've had editors do like live Q&As. We've built up YouTube channels, just giving more access and more value than ever before. So that way,
that's where, like, you don't always have to be to give the answer, right? I think the most fundamental thing that the editor has to be doing is he has to structure the actual conversation. Like, this is what's happening. These are the possible ways this could go. And these are the things that would drive it one way or the other. And as you're updating, because if you don't know what to do, right, it's kind of like, whoever first structured the idea of risk on, risk off, like, that was a structure of the conversation that everyone then followed and they started to listen to, right? And so like, if you don't know what the market's going to do, you say, I'm looking at this and I'm tracking this and I'm looking at this. I think it could go either this way because of this or either this way because of that. And we're waiting to see which way it's going to tip before we put money in to an idea. Like that's really valuable in its relationship building, because you're organizing the world and the situation for the reader to understand what's happening. Sorry, that's
yeah, for sure. And I think that's sort of related to, like, if you don't have promos working, then your retention strategy should almost be like a top focus, and just trying to keep the subscribers you do have on file, try to, you know, mitigate refunds and stop the bleeding as much as you can while you're figuring out that right promotion that's going to really hit. Yeah.
And that's, I think, you know, I think Porter brought that up too, actually, not to make this all about like, wow, Porter's a genius. But he is one of the best publishers that the industry has seen.
Yeah, he is a genius. I love listening to him talk.
I know, but like, yeah. And so like when he, I think he did say that at one point when I asked him about the, there was that period of time when they were like, we're not going in on crypto at Stansberry per se, because we think it's in a bubble. And everyone, like the other groups, were like laughing a little bit, and they were kind of being derogatory towards Stansberry at the time, because it was like there was so much money here on the crypto side, and then of course it crashed. But they were like, we're worried about our customer. We think that it's a bad time. And when their other stuff wasn't working as well, he's like, we focused on retention, just like you were saying, Wes, and we focused on kind of the customer and taking care of them. And of course, he was talking about like across that business, I mean, the different businesses having something like 200 million in renewals or something like that. Like their renewals are ridiculous. And so that like not losing the customers you have, right? Like pivoting to that. I think that's a great point, Wes. Like that's a really good.
Yeah, I felt really bad for him too when he said he had to fly coach down to FMS.
I know. That was such a great. Yeah. And of course,
what a bummer.
I don't know that well, it's a whole other story about whether I'm allowed to publish that or not. The whole video, because it was a phenomenal presentation.
Yeah.
But anyway, what else do you guys think? Do you have anything else on this, Matt, that you want us to kind of talk through? Or
I mean, I think basically the takeaway is, you know, get literate on resources real quick, and to the extent that you have existing products that dovetail into it, and believe me, any product you have can dovetail into resources, right? Mm-hmm. It all comes back to, you know, supply chain. So if you understand resources, if you understand the supply chain, there's always a way to get something that's of interest in markets into your product. And, you know, if you don't know what that is, like, you know, just ask. You know, what that one point that Porter brought up, like, if you don't, you're going to do yourself a service if you just ask someone, you know, who doesn't know the answer to something. It's going to save you 100 hours of research, 20-minute conversation, because that's you know, when you get stuck. And I think this market, there are a lot of people that are stuck, professional, non-professional. I mean, it's difficult to trade.
That's one of the things I love. Addison is doing this over right now with his podcast, where he's just getting people on who know about different things and having these really just interesting conversations with them about, like, you know, he had I think Mark Rosano, who's a really phenomenal macro analyst that you introduced us to, Matt, on and talking about kind of state of the markets. And like, you can do that. You can actually go to other people. And if you need experts, like Matt and I are happy to make introductions and connections across the board for you or any of your editorial teams.
Yeah, that's how we all learn, right? And that's the whole process. Like, if you don't know something, ask somebody who does. And, you know, especially if they tell you a good story, you're going to remember it, right?
Yeah. All right. Final thoughts, Wes?
I think like one of the biggest learnings I've had in the last year plus or so is just being able to pivot as quickly as possible, and while also doing it in a way that like is long-term building. So I think like a challenge is like conversations we've had is like, you know, when do we rip the Band-Aid off of these greed and old style promos and worry about what's happening now? And then the flip side of that is like, well, how long is this going to last? You know, inflation was supposed to be transitory, and, you know, everything changes so fast. And with the lead time to promos, it's like tough to know that balance. But I think that's crucial, and that can trickle down from anywhere from just doing how I do lead gen reports or premium promotions or whatever, and then also investing in content and when being able to continue to offer value when the sales aren't as what they used to be. So, you know, we've been building up YouTube, having more regular content for the existing subscribers, things like that.
Nice, nice. Flagle?
Yeah, I mean, I would just want to say, you know, I think two of the most important things you can do in our business, no matter who you are, is prospect for ideas and test them. And so, you know, my message is kind of the same as it was at FMS. Test, test, test. Do not waste an opportunity to learn. And just constantly be prospecting for new ideas and vetting them. And, you know, what we've talked about today is a great way to do that and has been a successful strategy for me. And if you have any questions about doing either of those or just want to talk, hit me up. And yeah, that's it.
Yeah, awesome. No, I think like I've wanted to do, I've wanted to structure kind of a, I don't know if we're going to do it like in interviews and conversations like this, where mix it in with some of our Canon Network events, but like kind of focus a little bit more on the idea generation side for the industry. Because with Canon Network, we are already bringing in experts and people from like, you know, other sides of the market. So I do think like having a more structured conversation on an ongoing basis for an idea generation is going to be really useful. So
yeah,
anyway.
and I'll throw in, you know, one really easy source that you can use to learn about a whole lot of things is Twitter. I got involved on Twitter last year and wound up being involved with this really fantastic community of mining analysts that, you know, we all follow each other. People help out others with ideas. You know, some people have deep expertise in copper and all those things, but you know, just follow me at MF Warder on Twitter, and I have a bunch of lists that you can go through of people who are, you know, experts in one thing or another, and a lot of people respond. You know, ask questions, jump in. I'm certainly available via DMs there. You know, and of course you can always get
ask me.
like,
I'll make you an introduction to anybody here if you don't have their info. So
yeah, but I mean, be proactive because you know, this market's going to move pretty fast, and you know, I think it's you know, the best ideas to get to market first are going to be the ones that are going to be the most successful. So.
Yep. Awesome. Well, I appreciate it, guys. Thanks for doing this. This is a little longer one for us, and but this was a great conversation. So I appreciate you guys coming on and doing this for everybody.
No problem.
Thank you, guys.
Thanks for having me.